First of all, I would explain what forensic accounting is. The word forensic refers to suitable for use in a court of law. Forensic accounting utilizes accounting, auditing, and investigative skills to conduct an examination into a company's financial statements. The keyword here is investigative skills, investigative skills, investigative skills. Why am I saying this 3 times? Because I want you guys to remember it. It might be tested in your exam, so take note. You might be interested in the timeline as well. It started back in 1824, where interest in the modern forensic spread through the United States and England. Later in 1926, the attorneys throughout the Midwest start calling for expert opinions in forensic accounting. So 20 years later, Margolin, Wiener, and Evans, a major accounting firm, was founded. In addition, they provide forensic accounting services. In 2000, the Journal of Forensic Accounting, Auditing, Fraud, and Taxation began publication. 2 years later, do you guys know about the Enron scandal? I'm sure you do. As a result of this scandal, the Sarbanes-Oxley Act was established. It establishes that Public Companies Accounting Oversight Board is charged with developing auditing standards, conducting investigations, and ensuring corporate compliance. As a result, there has been continuing emphasis on forensic accounting.
Now, let us discuss why we need forensic accounting. Why is it so important? Why? There are 2 factors. Come, let us take a look in the external environment. Forensic accounting helps to provide liquidation support to the court and government. Recently, people are increasingly going to court action to resolve their problems. Thus, the court needs forensic accounting to obtain documentary evidence and review relevant supporting documents as a support. Besides, it helps some specialized body to detect fraud. When you are an insurance company, you will need forensic accountant to quantify the losses and to ensure all the claims made are not fraudulent. In addition, it helps to settle family matters. When you involved in divorce or family law cases, you will need forensic accounting to ensure an equitable division of funds and to determine the income available for child support. Lastly, to treat terrorism. Terrorist activities are increasingly nowadays. Our safety is unsecure. Thus, we need forensic accounting to trace these terrorist groups by investigating the financial records.
Why we need forensic accounting from internal environment perspective? As you can understand, globalization leads to merger, acquisition, and joint venture. For example, Dell International Company, you can imagine the transactions are lost. Potential of errors increase, so we need forensic accounting. Next, why employee fraud causing the demand of forensic accounting increase? Imagine that if a cashier steals 1 ringgit per day, will you know? Can you detect it? This is why the role of forensic accounting is vital. Continue to next point. What do you mean by management fraud? When the financial table of a company colludes, we as a subordinate is difficult to detect. Here comes the forensic accountant role. Lastly, as mentioned by Mr. Shaharuddin, companies such as WorldCom, Enron, Waste Management are the example of company failures. All these are due to fraud. Forensic accountant is going to investigate on them. Be careful. Watch your action before you do it.
Now, let us watch a video. Olympus started up its own business in 1980s at Japan. Toshiro Shimoyama holds both the positions of president and CEO during that time. However, there was a general downturn in the economy followed by the appreciation of yen. Thus, Olympus' operating income reduced significantly. To tackle this problem, he used loss suppression scheme and loss disposition scheme to cover it. These involve merger and acquisition deals, known as M&A, at vastly inflated prices and huge payment advisory fees. In 2007, Michael Woodford, who was appointed as British CEO, discovered the suspicious exorbitant price of M&A transactions and started to question. He seeks for the help of KPMG, but failed. Lastly, he went forward to British authorities as a whistleblower.
How does it work? There are 5 steps to conduct an investigation. The first step of forensic accounting is accepting the investigation. You would require necessary skills and experience to perform this step. These include detailed knowledge of fraud investigation techniques, legal framework, training in interview and interrogation techniques, and maintaining safe custody of evidence gathered. Also, you should not provide audit and forensic investigation services requested by the same audit client. This is because it will lead to other ethical problems, such as self-review, advocacy, and management threat to objectivity. Besides, you have to compensate the commercial and negotiation of high fees for the work provided, and you must also take into consideration the involvement of senior and experienced members in the investigation. The second step is planning the investigation. You have to consider the objectives carefully and plan to use the best way to gather evidence. The objectives of this investigation are: first, identifying the type of fraud that has been operating. Second, identifying the fraudsters involved. Thirdly, quantifying the financial loss suffered by the client. Fourth, gathering evidence to be used in court proceedings. And lastly, to provide advice to prevent the reoccurrence of the fraud. The third step is gathering evidence. You can use either the direct method or the indirect method. Direct method can be known as transaction method, which is used to examine documents, interview management, and employees. On the other hand, there are 4 indirect methods. The first method is cash T method, which is used to compare cash received to the amount of cash spent and determine understated income. The second method is source and application of fund methods, which is used to examine the amount spent on lifestyle versus assets and investment. The third method is net worth method, that is used to calculate total assets and subtracts total liabilities and then compare to reported income over several periods. And lastly, the fourth method is bank deposit method, which you can use to analyze total deposits during the year and making comparisons.
You can use several techniques to gather evidence. The first technique here is chain of custody. Just like in CSI, forensic accountants safeguard evidence through a financial chain of evidence. Why? This is because they want to ensure that the evidence is not damaged. Timeline analysis shows all details from the beginning of the event until the target is apprehended. So, when you want to prove that someone is involved in an insurance fraud scheme, this timeline analysis shows all the amounts that are entered into the fraudster account. Link analysis shows connection between people and data by comparing the addresses and phone number that they have dialed. Genogram displays personal relationship. Simple symbols and lines are drawn to illustrate the family relationship. So, the motive of crime, for example, when they have conflict of interest, can be determined. The proof of cash procedure is similar to the bank reconciliation that we learned earlier. This is to verify the cash account, but it is more detailed and extensive. The last technique used is question document. Let's see at the slide. Seeing inconsistent perforation match and different ink intensities on the same document, you may think that, this document might be altered by someone before. In the fourth step, investigation is reported precisely. Recommendation is included to prevent similar fraud in the future. So, when an investigation arrives at legal proceeding, investigators have to present the evidence clearly and professionally. You may wonder why again. This is because non-accountant may not understand the complex accounting issues.